A big welcome to the Good Money Guide Quiz of the Year with me, Michael Hewson. We're going to be recapping the events of 2024 with a game that puts the fun back in fundamental market. Who writes this stuff? Joining me today are Chris Beauchamp, Chief Market Analyst at IG, who's probably been doing this almost as long as I used to. Really? Fiona Cincotta, Senior Market Analyst from City Index. I would say the same, but I don't want to age her too much. And Michael Brown, Senior Research Strategist from Pepperstone. Or should I say, award-winning Senior Research Strategist from Pepperstone. You can give me the money later, mate. The way it works, 3 expert analysts will answer questions about major market events for 2024. If they get the question right, they will get a certain number of points. The points will be based on the closing price of the asset in question, and that will be then totaled up, and that total goes to a charity of their choice. Without further ado, we'll crack on with the quiz. Fingers on buzzers, ladies and gentlemen. No premature pressing, because
Why did that come?
because I saw your hand just about to go there, and I know how competitive you can be. So, what was the FTSE 100 record high in 2024? Oh, Fiona.
8,075. Oh no, 84,075.
I think I can accept that.
It's very generous. It's
very
kind.
It was nerves. It was nerves. Yeah.
8,474.41. So that gives you 831 points because that was the closing price of the FTSE 100 last night.
Can we take away the 400 that she was off the actual answer as well?
No, but what I might do is, if you were in negative territory and you challenge me again, I might take it off your screen. So, the FTSE 100, record high. Interesting that we've hit a record high and yet we're only around about 5% up this year. Underperformed the S&P, which is up 25%. We've seen record highs for the DAX, the FTSE, the Nikkei 225 as well. Any thoughts on what we can expect to see next year?
Well, if you look at the US, I think you would be surprised to see more record highs, to be honest with you.
Well, the FTSE,
well, maybe the FTSE perhaps. It wouldn't take much to take it there, really. I mean, if we're 8,300, it's certainly a little bit by year end.
What do you think's held it back?
Because it's not a very exciting index, is it?
No tech. It's the lack of tech, isn't it? That's been the
But then again, you've got the DAX, which is up 10 or 15%.
But that's SAP has been a big driver in that one, hasn't it? I think.
Exactly.
And also, it's a total return index, unlike the FTSE, which is not. So essentially, it's based on dividend reinvestment.
It's a miserable year for oil prices. It's not great for the FTSE 100. So.
No, I mean, obviously underperformers there. I mean, were there any notable sort of stocks within the FTSE that has helped drive it higher?
Well, NatWest's one of the best top 5, I think, for the year. So banks actually had a really, really good year, UK banks, mainly because they were so cheap.
Barclays, NatWest, Standard Chartered, they're all in the top 10.
Yeah, exactly.
Well, and then of course you've got the other problem. Some of the best performing stocks are now disappearing off to the stage.
Yeah.
Something like Ashtead.
Which
They're certainly not going to be the last to do that.
No,
and we'll probably cover that in a later question.
Oh, you're giving the questions away now.
It's just sort of very, very broad. But so I think for me, there's this chatter that perhaps we're nearing a top for stock markets.
No.
Do you buy into that narrative, or do you think that we could see, potentially a move on the FTSE 100 towards 9,000?
I think a lot for the FTSE depends on what's going on in China. So, I mean, obviously we've heard this sort of rumblings and we've heard news of extra stimulus, and we've heard that China is going to adopt a looser monetary policy next year. So those could be factors which help to boost those heavyweight mining stocks. Obviously, we've got the banks doing well. So there is a potential for 2025 to be a bit better. But I think, this year is a bit disappointing compared to its peers.
I was looking at a chart the other day, and the performance of the FTSE since 2020 is still lagged behind pretty much everything else.
Well, I was just about to say we sit here and we go, it's a disappointing year, and we all agree with that. But I think we've probably said that for the last 5 or 6 years. To be completely honest with you. Yeah. And what's going to change in 2025? Personally, I don't think anything will. I mean, your point on China's a good one, but they want to prop up their domestic market. They're not propping up and trying to support the economy. So I think the spillover impact of that will probably be quite limited. And actually, if you're an international investor going, where am I going to allocate to in 2025? I think the UK is very, very close to, if not at the bottom of your list.
Yeah, it's very low on the list.
And it's just a small market by comparison. So by waiting, you just won't give it that much attention, unfortunately.
Okay, well, let's wrap
Well, that was
this.
an optimistic start,
It wasn't. No, I mean,
That's cheerful.
we still think
Merry Christmas, everybody.
We still think we're going to see progress on stock markets in 2025, and I think that was really what I was looking to take from this discussion. Yes, there are things to be pessimistic about, certainly in terms of the UK market, but in terms of returns more generally, I think we can expect potentially more of the same, because essentially central banks are still looking to cut rates.
No, absolutely.
Okay, so question number 2, we're going to move on. Oh, here goes the button. Look at him. He's keen to get on the scoreboard. Okay, so what failed to break through $100,000 in November? Chris?
Bitcoin.
Absolutely. So that gives
I don't think my buzzer works.
You had a chance in the rehearsal.
you blew it. So 100 points for
Did you
Chris.
get 100,000 points for that? No?
No. Unfortunately, Richard told me he's not made of money, so you only get £100.
There's some random dividing going on. Fine. All right.
So you'll have plenty of opportunity to catch up. There's around about 4,250 points to play for.
Okay.
So you're good. You're good. Don't worry. So Bitcoin, boom or bust in 2025. We've hit 100,000. Can we go further?
To the stars.
To the stars.
Yeah,
Oh,
I'm a Bitcoin bull.
you are you?
Yeah, completely.
So what are you targeting, Fiona?
I think it's around 125.
125. So another 25%.
Yeah.
That's very conservative.
It is.
Yeah,
for
I
Bitcoin.
think.
Bitcoin's very conservative.
If you look at the
That's
previous,
a spread, isn't it?
if you look at the big moves from the last couple of times, it's sort of rallied hugely.
Yeah.
It's 1,000%, and we're only 500% up from where we are. So
Yeah, but each cycle, it's got slightly smaller, hasn't
yeah,
it?
you could argue. Yeah,
A little bit more conservative I am, but I'm definitely bullish
What about other cryptos? Ethereum?
as well.
Yeah, that as well.
I mean, because that's really underperformed Bitcoin. So there is potentially a lot of room for Ethereum to take that all-time high again.
And I think for me, that also underpins the whole blockchain. So why wouldn't it?
Yeah.
It's
Completely.
Ethereum that underpins the blockchain, not so much Bitcoin.
Yeah.
Bitcoin just happens to be the flag bearer.
but
for
it's
crypto.
digital gold now, according to
And also you've got
Federal Reserve.
and you've got the ETFs as well.
Yeah.
And obviously that's given it a
Yeah.
boost.
Yeah.
Obviously Trump being re-elected and talking about creating a Bitcoin reserve for the US Treasury.
Well, I wonder, I'm interested in that one though, because we've heard that from Trump so many times where we've had promises or rhetoric or whatever it may be, and then nothing really comes to fruition. So that could end up just being one
But that's
huge
true.
buy the rumour, sell the fact trade. If we get to the middle of next year and we haven't really seen any sort of pro-crypto policies from the Trump administration, then I think the market will take quite a dim view of that, I would imagine.
Yeah, I think also though with the appointment of the SEC chair, Paul Atkins, that is already sort of like
It's a signal.
Yeah, completely. But as you point out, I think that is the big risk, is it just doesn't live up to expectations.
So it's signal to noise ratio basically. You
Yeah,
hope that
always,
especially
Yeah.
with crypto.
Yeah.
Yeah.
Okay. Let's move swiftly on to question number 3 after that crypto discussion, which actually I found very interesting indeed, because I own a little bit of crypto myself. Anyone here does?
Yeah.
Yeah. Well, that's why you're bullish.
Never have guessed.
No, really? Okay, so question 3. So, what is the most expensive stock on the FTSE 350 in terms of the actual physical price?
Oh. I'm just going to take a guess.
We've talked about this. Well, the thing is, you better buzz. You don't.
It's not Ashted, is it?
No.
Well, that's because we've spoken about it.
I was going to say, we just spoke about that.
No, we've spoken about it on our podcast.
Oh, well, that's
You think I pay attention to what you're saying on that show, do you?
Oh, no. I'm just going to go for, I think it's,
So FTSE 350.
it's 50.
Okay.
Oh, you see, I was going to go Anglo, but
No.
no.
Okay. They've just been.
Just shows I haven't been paying attention to
Right.
our own
Well,
recording.
basically, I'll give you a clue.
Go on.
They've just been admitted to the FTSE 100.
Silence.
It's telling, isn't it, really?
No, because they were already in the FTSE 100. We talked about the FTSE rebalancing quite recently. Multiple choices.
That's on you.
Yeah, this is now looking really bad on me, isn't it?
It is. Okay, so I'm going to give you a clue.
Clues,
I'm going to give you a
sector
clue.
at least.
Come on.
Gaming.
Gaming.
Is it Playtech?
No.
Oh,
FTSE 350.
I actually remember us talking
Warhammer.
about this now.
Oh,
Buzz.
The Game Workshop.
There you
people.
go. Games
Yes.
Workshop.
You can tell I'm into my gaming.
Yeah.
Answer, can't you?
That was painful. So obviously no one in this room has played Warhammer, have they?
No.
No. Does anyone play any games at all?
Mario
No.
Kart.
Apart from this one.
Yeah. Okay, so let's move this on. 141 points to whoever got that one right. Michael, there you go.
Eventually.
So I think we'll move this discussion on because we haven't got any gaming buffs here. I love gaming, by the way. I've got a PlayStation 5 and an Xbox.
Oh.
So I was hoping to get... Now I've got more time on my hands to be able to do it. Well, why not? So let's move on to question 4.
Have you just based these questions around your hobbies? Is there going to be one on golf or walking or something in a second?
Or walking football, perhaps. I don't know. We'll have to wait and see. Question number 4. How much cash does Berkshire Hathaway currently hold?
120 billion?
No.
More.
Keep going.
Is it close to 400 billion?
It is closer to 400 billion, and I think I'm probably going to accept that. It's $325 billion. And again, we talked about this on our podcast. And again, it's nice to know that you actually pay attention to what we talk about.
Are you doing a different podcast? Are you moonlighting somewhere
Not at
else
all,
at this point?
Not at all, mate. You know, I only basically ask the questions based on the subjects that Richard gives me. Okay, so 461 points to Chris. I think it was Chris, wasn't it? Yep. And what's going to happen to Warren Buffett? The shareholder letter, a little bleak. And also, why do you think he's holding so much cash?
Yeah.
It's tough when you're that size to invest in decent opportunities. I mean, he's well past his classic investor stage, value investor stage, isn't he? And he only tends to go for those really special situations, if you like. Now, people come to him. Essentially, you don't go looking as Warren Buffett. You wait for something to happen, and you wait for people to come to you. Really, so this is.
Yeah, I mean, he's sold down his stakes, some of his stake in Apple.
Yep.
Bank of America.
Yeah. Which actually, I think a lot of people have interpreted that wrongly.
I think
in
so
saying,
too.
you know, old Buffett's not a fan of Apple anymore.
Yeah, no.
Well, it's not that. It's just he doesn't want to be too concentrated or have
Yeah.
too large a holding in one firm. But you're right. It is tough to build up a stake. I think the last significant stake he built up was in Chubb, the insurance firm, if I remember rightly. And, you know, actually, when you look at it, and over the last 2 or 3 years, you've been able to earn 4 or 5% on cash.
Yeah.
Why not just leave it in treasuries and wait for someone to come knocking on your door?
Yeah, to wait, and that's I suppose it's a lesson there.
I think there's also an element, if I may, that like any good investor, he locks in some profit. Basically lowers his average for the value of that particular exposure. As one of the first rules of trading and investing that I learned when I was a trader back in the day, if you're not 100% certain how much more upside there is, you lock some profit in.
Yeah.
And then if there's a dip, you then come back in again and load up to improve your average, in essence. So it's not a warning sign for a potential stock market top. You just think it's just prudent
It gets a lot of
housekeeping.
play like that, really. Oh, it's a sign that he doesn't think it's going to keep going. But that's not the way to look at it, I don't think.
I would agree if he was selling if he was selling out completely.
Oh,
but the
yeah.
fact is, he's still got money in the game.
Yeah, exactly.
So let's move on to the next question. What reached an all-time high of $2,790 in October?
Ooh.
What was it?
Gold.
Gold. Absolutely right. 271 points to Fiona.
Yay!
Wow.
Look Look at that go.
So you talked about digital gold, or collectively. Still a safe haven for investors? Gold price $3,000 an ounce, perhaps later next year.
It's definitely
make me a case for gold. A barbarous relic.
Is you or gold?
No. If I could take points off of that, I would.
I mean, gold, it always has a place.
Yeah.
It's for reasons that, I mean, it's more the meaning of it than anything else, I suppose. I mean, you can't argue, as an investment this year, it's done incredibly well.
Yeah.
So you've done really, really well. Is it going to be the same in a world where inflation continues to fall, you could argue, but it contains a bit less an appeal, and you've got better places to put your money, really.
I suppose it really depends on whether or not you think inflation does have further to fall, or whether perhaps it could be stickier than an awful lot of people think. So you've talked about Bitcoin, $125,000. Any of you got a longer term target for gold?
I think it has potential to get up to 3,000. I think especially if we see more geopolitical tensions across next year, which with Trump coming into power, you know, who knows? There's more uncertainty. There are more questions over what will happen as far as trade's concerned. It might be that safe haven demand that gets driven. I think, if I remember rightly, under Trump's previous 4-year administration, gold rose. And central banks are expected to continue cutting rates. So that, I think, does help it. It just depends on what we see with the dollar, because obviously we've heard that Trump is sounding a little bit more in favour of a stronger dollar, which would be the big risk, I think.
Doesn't help gold, does it,
there.
a strong dollar?
Doesn't get there, no.
Right.
Well, no, we say that.
It's not been too
I was
bothered.
gonna
But
say,
actually, you
it's
look
at
at this
record
year,
high.
gold's at a record high, and the dollar's rallied against pretty much
gone up.
everything. So, you know.
Yeah, it's true.
I think there's a case for saying that everyone needs a bit of gold in their portfolio.
Yeah.
And maybe a little bit of Bitcoin if your name's Fiona.
Yeah.
Alrighty, let's move on to the next question. And this is very much domestically. So what was the IPO price that Raspberry Pi placed that? Raspberry Pi price IPO. No.
275.
I was 278.
274.
Fiona gets it. 280. Fiona gets the points. 454 points Fiona gets, which was yesterday's close of Raspberry Pi.
Oh, it's done really well, isn't
It
it?
has done very well.
Yeah.
In fact, it's done pretty well over the course of the past couple of weeks. It's just suddenly shot up, and I can't really figure out why. But brings me to a wider point, because I think the fact that Raspberry Pi sticks in my mind is it's been really the only successful IPO that we've seen this year. And in fact, the amount of money raised from IPOs here in the UK this year, it's $1 billion. Most of that, Raspberry Pi. And in figures according to Bloomberg released this morning, the UK ranks number 20 in the amount of money raised.
Wasn't it below Malaysia or something?
Below Malaysia,
Yes.
below Oman,
Yeah,
below
Middle East
Luxembourg.
markets, yeah.
Oman has a stock market 1/20th of the size of the UK.
Yeah.
What's gone wrong?
Well, how long was this show?
Well, I would suggest that you've got 2 or 3 minutes.
I mean, a lot's gone wrong. Probably need to be slightly careful given where we're sat filming this.
I don't think it's anything to do with where we're sat filming this. I think it's to do with the regulatory environment.
I agree.
And I think the fact that this government and previous governments, I don't want to be party political here, previous governments have not been friendly.
I would agree. I think
Business.
the regulatory environment is a big issue, particularly in terms of the rules around voting rights and the amount of a company that needs to be offered an IPO. I think the investor environment is not particularly conducive either. You think about the biggest players in the London market are naturally very, very risk averse market players, pension funds, insurance, etc.
That's by design, though, by regulation.
I agree, but it's not going to help attract those big listings that we need. And I think the third point is, as you alluded to, the government side of things. No one actually, I think, realises how big of a problem this is and how significantly this is raising the cost of capital for all UK businesses, and no one wants to get a grip of the issue. And I think, this year we're talking about the UK being 20th on the list. How much lower are we going to end up next year or in 2 years or in 3 years? Because we all spend a lot of time talking about it and the death of the IPO in London, but no one seems to actually have the drive or the desire to solve this problem.
And do you know where we were in 2014? We're number 2 on the list.
Wow.
So there you go.
And we dropped to number 20 in 10 years. Yeah. And we've had Ashtead leave. Ashtead is talking about moving its primary listing to the US. Flutter has gone or going. CRH is gone or going.
Yeah.
What could happen next year?
More of the same, I think.
Yeah.
So do you think, and I'm going to put this out there, I'm going to predict that Shell will have another discussion about moving their primary listing to the US.
Yeah.
And if we lose Shell, then...
Yeah.
But is that what it's going to take?
I think it could be.
Is it going to need the market to lose a behemoth like that for everyone to suddenly sit up and go, we've got a real issue that we need to sort out?
So how can you change it when you've got a US market that's so awash with liquidity? It's such an attractive place to be. It's very hard to compete with that.
I mean, you look at the oil companies, ExxonMobil, Shell, BP. ExxonMobil is in positive territory for this year. It's based in the US.
Yeah.
Shell is barely breaking even, share price performance to date. And BP, could that be a takeover target?
Yeah.
ADNOC's already had a sniff around it earlier this year.
Yeah.
Abu Dhabi National Oil Company. So I think it, would benefit from a discussion at a much higher level as to how to make UK markets more attractive.
Yeah.
So fingers crossed the regulators and the government have that discussion. But based on what I've seen so far, I'm not optimistic. On that positive note, let's move on to the next question. So, market cap of the most valuable company in the world. I'm not asking for the name of the company, I'm asking for the market cap to the closest trillion.
Nvidia, 4 trillion.
No.
It's 3 trillion.
Chris was closer. Okay, I'm going to have...
3.8.
Okay, Fiona's closest. It's 3.74 trillion, and it's not Nvidia, it's Apple.
Yeah.
Yeah, it's still Apple.
They come back again.
It's come back. So it's the big three. You've got Microsoft, Apple, Nvidia. So Fiona gets 246 points. She's running away with this.
Yay!
She had a very good start, to be fair.
Yes,
Yeah,
the big head start helped on that one.
So, I mean, let's broaden this out. Obviously, the Magnificent Seven. Nvidia, Apple. Obviously, they've been swapping positions when it comes. Can Microsoft actually start to make inroads? Because if you actually look at the performance of all those three companies, Microsoft has really underperformed relative to Apple and Nvidia, because I think if we were talking about this a year ago, Microsoft was probably the biggest company. And now Apple and Nvidia are now trading punches, if you like, when it comes to, for that particular mantle. You know, has the Magnificent Seven, have they got further to go? Amazon, Alphabet?
These are companies that are so different. The parallels with the dot-com boom are just pointless, because this was a very different world. The companies there that didn't make any money, now they throw off cash like there's no tomorrow. And there's no change to that at the moment. And the cash generative powers are why you're buying these companies, even at these, you might argue, slightly excessive valuations. But that doesn't go away. The thing we've learned from the last 2 years is that the strength of these companies is partly lies in their size, and it just means the winners keep on winning. And there's much...
So, scale.
Yeah, scale is such an important thing, and it means it's much harder for other competitors to even get a foothold, really.
And it drives that development as well. That scale helps drive development. I mean, this week there was just that news about the Willow chip with Alphabet, which again, you know, things like that are just going to keep coming and keep driving those share prices higher.
And Amazon are now designing their own chips, but in a sense, does that put Nvidia at risk of being cannibalized from other areas of the market in terms of their own margins? Because obviously Nvidia's margins they're about 75%.
Yeah.
Well, I think the other risk that Nvidia have got is a competition risk. I mean, I know they're not representative of the world at all, but China are already sniffing around in terms of anti-monopoly. It's not going to take the EU particularly long to start doing the same because they want to regulate everything out of existence. So I think that's another threat to them. You know, they have been the market leader for the last 2.5 years in this specific sector. The question is, can they keep up, not only in terms of everyone else catching up with them, but also because they are, so far out ahead of everyone else, they are going to be target number one in terms of a regulatory and an antitrust perspective.
Yeah, but I think, and I'm going to be slightly politically controversial here, does anyone really care about the EU? I mean,
Well, the EU probably do.
They do, but ultimately, at the end of the day, you can't reverse the AI growth bubble, and ultimately all of these companies in the EU need AI chips. So whether or not the EU regulates them or not, the demand will still be there. And ultimately, if the EU needs anything at the moment, it needs growth. And Mario Draghi's paper earlier this year outlined that in very stark detail. And yet we have the European Commission looking at ways to somehow constrain the growth of its own area by ridiculous diktats.
The biggest risk to Nvidia is simply that its margins don't remain as strong. That you have competitors that manage to take market share, and that the share price that has done so well simply begins to falter because of that. The reason you buy Nvidia, the reason you buy Apple and Microsoft is the earnings growth they promise. And if that starts to falter with Nvidia, it doesn't show any sign of it, but if it does start to falter, that then starts to call the share price into question.
We did sort of see that to a certain extent with Tesla though, didn't we? Because obviously the margins on their electric cars, they came down. But we have seen a really decent rebound in Tesla's share price this year. So what you might get is a little bit of a sell-off initially, but perhaps that's a good idea to pick up on any dip.
Yeah.
Okay. Next question. What disastrous thing happened to the AIM market on the 30th of October 2024? Michael.
Budget inheritance tax.
Absolutely.
Relief changes.
So 138 points to Michael.
Does 40% get taken off of that because of Rachel Reeves?
I think it's actually 20%. I think she halved it. So I mean, how bad was that for AIM? I mean, it's not good, is it? And what does that mean for small caps? I suppose it goes back to our previous discussion about the attractability of the UK as an investment destination.
Yeah, you can't really say AIM's been a wonderfully performing index, so that's the point, isn't it? As a place to put your money. You know, a few stars, ASOS, or it's Fallen Angel now, really. But other companies, AIM stocks, anybody household names?
I think it's more
ASOS.
Aside from ASOS, what else have we got, really?
I guess it's more the signal that sends, though.
You
know, there's always that belief in the hope that the next one is going to come from AIM. And then you've got a government that's sort of actively making the index less attractive than it otherwise would be, the market less attractive. So I guess that's the bigger signal that's being sent there.
Are you in favour of government forcing pension funds to invest in UK assets? I've got to say that I'm not.
No, that's
I'm a money manager.
nonsensical.
I want to put the money where I think it's going to gain the best return. And forcing investment funds to invest in UK assets doesn't strike me as a particularly good idea.
No, not in and of itself anyway.
No. I mean, if the growth is there, absolutely.
Or you couple it with reforms and you say, look, this is the programme we have.
But if the growth is there, they're going to do it anyway.
Exactly.
Because they want the growth. You know, if you're a fund manager, you're not going to sit there and go, that's the best performing market in the world, I'm going to go somewhere else. So it speaks for itself. You don't need to regulate people into doing it.
No. I think it's interesting, the performance of the Russell since Trump got elected. The way that's just popped higher. And made new record highs. I mean, I think for the past 3 or 4 years, it's sort of been trading sideways. The S&P, the Nasdaq, the Dow. I know you don't like the Dow.
No, don't get me started.
But the Russell's got a really decent, had a really decent kick higher, and I think that's on the basis that I think the market thinks that Trump is going to be business friendly. And
deregulation, business friendly.
I mean, obviously, deregulation, even of itself, sometimes people think deregulation is bad, but so is over-regulation.
Completely.
And it's striking that balance. And the hope is that perhaps he will continue to do that. Okay. What was at 5.25 in August, then at 4.75 in November?
BOE bank rate.
Correct. 475 points for Michael. We knocked out the decimal point for you, mate.
Very generous.
Yeah. Okay, so interest rates, where they're going next year, and potential impact, market impact 2025. So we can talk about inflation, we can talk about 2024 was the year of rate cuts.
2025
what
will
is
be
25?
the year of rate cuts.
Is it going to be rate cuts? In some dark areas of social media, I've been reading that potentially we could see rate hikes. I'm not really
See,
buying into that. No, I mean,
It's a
we
very,
are
very
talking
dark corner
very,
you've
very
been in
dark
there.
corners of social media. I think they're sort of trying to attract clickbait and stimulate conversation. How many more have we got left? Because the Bank of England is projecting 3% by the end of next year. Can you see another 175 basis points? I can't.
No.
not over the course of this year, but if further on, I think if you can project that inflation trend, I mean, you're looking at next week's wage figures for the UK are expected to go up a touch. So maybe that pressure is there.
What about CPI? What about services inflation? What about...
Yeah, it's still really, I mean, it's still sticky,
Yeah.
I mean, it's moving in the right direction,
But not fast enough.
but not fast enough. And I mean, I think as far as the UK jobs market is concerned, we're seeing an ongoing resilience there. You've also got potential impact from the budget, which we've heard from Bank of England. They consider to be inflationary. So yeah, I think there is room for rate cuts, but not that many. Not a chance.
You talked about the resilience in the labour market, and Michael just caught my eye there because we've talked about this at length in our podcast that we do. And businesses, supermarkets, retailers talked about the additional costs that the budget has imposed on their businesses. We could see increased automation, self-service checkouts and what have you. We could see unemployment, and it's already ticked up, go to 4.5, 4.6, 4.7. That could actually prompt the Bank of England to cut rates faster, perhaps, before they're ready to do so.
Yeah, potentially, because I mean, the effect of that, having higher unemployment, it feeds through into the wider economy. Then we'd expect to see consumption reduce and inflation come down.
Well, then you get to the ECB's problem, which is rate cuts for a bad reason. Whereas the Fed is doing it for all the right reasons. The problem with the ECB and the BOE is they might be in that situation you have to cut because the economy is in desperate need of some kind of assistance.
I think the ECB, those headline rate is about 1.5% below the UK's.
Yeah, so you could argue they're further ahead.
They're much further
in that
ahead.
process, but
their peak was lower as well.
Yeah.
I think the BOE have got a real problem on their hands next year, though. You say this year's the year of the rate cut. Are we going to say we could be sat here this time next year, plausibly saying 2025 is a year of stagflation in the UK, because you've got inflation, as we said, which is really stubborn. You know, services have been north of 5% since the middle of 2022. The labour market is clearly weakening, although the ONS can't give us accurate data on that, and will continue to weaken after the budget. We've raised the cost of employment. It's naturally going to weaken further. And growth is already stalling at best, and is probably that momentum's going to wane further through the winter, you would imagine. So actually the BOE will then look at that and go, you know, we're losing momentum from a growth point of view, the labour market is weakening, but inflation's still not at target. And that's just not going to let them cut rates, because if you read all of the research, which sadly I'm boring enough to have done, actually if you cut rates in that scenario, you make the problem worse rather than making things better, because you just further embed those inflationary pressures. So we've got Governor Bailey saying 4 rate cuts next year. I think that's probably the most we're going to get from the BOE.
And there'll be 25 and not 50.
Absolutely.
And you're looking at potentially February as the first one?
Yes, well that's when we get the next monetary policy report. But the problem for the BOE is that that's still 3 months before the national insurance changes come into effect. So we won't really know the full impact of that until the May BOE.
Well, probably the summer.
Even later than that, really.
Because obviously the employment numbers are on a 2-month lag anyway, so you're not really going to see the effects of that.
Yeah.
So this is the final question, and seeing as Fiona is in the lead, she really needs to basically buzz in before Michael, otherwise she could lose.
No.
So fingers on buzzers. How far up is Tesla as a percentage this year?
Ooh, 71%.
Yeah. Fiona wins 71%. She gets 424 points, which was the closing price of Tesla last night. So the winner of the 2024 Good Money Guide Quiz of the Year is Fiona with a very worthy 2,226 points, followed very closely by Michael Brown. One award you didn't win this year, mate. 1,354. And bringing up the rear with a wooden spoon, Chris Beauchamp, 561. Let's hope that your analyst skills are better than your quizzing skills. Anyway, so Fiona, what's your charity?
It's Great Ormond Street.
Great Ormond Street, what a worthy cause that is.
Yes. No, my son's a patient under Great Ormond Street and they are amazing every time we go in there.
That's really good to hear, and I'm sure they'll be very grateful for that money. So on that note, I'd like to say thank you to Chris, thank you to Fiona, thank you to Michael for all the banter and the answering of the questions. I'd like to wish you all a very Merry Christmas and a very profitable and prosperous 2025. Thank you very much for coming along. Let's all go down the pub.